Trading Nut, episode 133.
Just know that your attachment to a certain result, attachment to money usually, and to being right and winning, that's your number one cause of failure.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind.
What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got Sami Abusad here on the show. Now, Sami is a stock and crypto trader. He's from T3 Live. If that sounds familiar to you, it's because I had his colleague on, Scott Redler, a while back, who is one of the CNBC pundits. So if you've heard of that name, Scott Redler, that's probably where you've heard about him from, CNBC. So he's Scott's colleague. And we got a bit of a rare kind of interview. It's other than the fact that it's absolute gold, and there's one or two things I took away personally from this myself, and you hear about that in the show. But Sami also shows us his E-Trade account, his live E-Trade account, the actual wins and losses, and you'll see that he's made quite a bit of money in there, almost $1 million this year, and we're only 7 months in. So we also shot a simple trading strategy video where Sami talks you through a strategy he uses on the stock markets. So if you do want to pick up a stock trading strategy today, then check out the video we shot after the interview. Really, really worthwhile checking out. If you do want to pick up a simple Forex trading strategy, then what I'm doing for my guys on the Robot Builders Club is I'm automating part of Kieran Davis's strategy that he taught us on his recent video. So if you don't know what that is, go and check out that video. It was around market manipulation and how the banks get in. What I'm doing is I'm automating some of what he talked about and putting it into a trading robot, which is what I teach in my Robot Builders Club. So if you do want to get hold of that, you're going to have to join. Now, what I have changed here is, other than the fact that the doors will be closing soon, I have opened up a payment plan option for the Robot Builders Club. So if you want to find that out about that, then hit me up on email, or what you could do is go and do the free training that I offer up for anyone that's interested in the Robot Builders Club or wants to grab one of my free trading robots over there on tradingnut.com, and you'll see a link which explains about the new stuff in the payment plan underneath the videos. So, folks, enough from me. Let's get on with this show with Sami Abusad. It's a doozy. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With CTI, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed. All right, folks, here we are on Trading Nut. We've got Sami Abusad here on the show, all the way here from T3 Live. Sami, welcome to the show.
Thank you for having me. Pleasure to be here.
Well, look, it's great to have you on board. So, Sami is the head or director of education there over at T3 Live. I've had Scott Redler, your colleague, on the show before. It was an awesome interview. The guy's on CNBC all the time. And Sami is a professional stock trader from over there, and we've got him on board here to teach us all about how he got started in the game of trading stocks, and also we're going to do a little video after this as well, where he's going to walk through some stuff on the chart. So, Sami, to start off with, how did you get started in trading stocks?
Okay, it's a long story, but I'll try to keep it short. It started when I was still in college. I wanted to study something that was math related, but was practical. So I ended up studying accounting, and while still going to school, I started working part-time, and in 6 months, I saved $20,000, and I didn't know what to do with it. I wasn't a spender at the time. So I read about Warren Buffett, who was the second richest man in the world at the time, and I read that he made all his money from the stock market. So that fascinated me. Then I read about a 21-year-old kid from New York who made $1 million the year before trading, and I thought, if he can do it, I'll blow him out of the water. So I got really serious. I know I was really competitive. And so I started I had $20,000. I used $16,000 of the 20 to open an account with. And within 6 months, I made $10,000. And 6 months later, and the account was almost at $50,000, from 16 to 50, almost 50 in under a year. And so I shared my results with my brother, who's a PhD and the brainiac in the family, and he started doing his research, and he told me, man, if you can make that kind of money by buying and holding, imagine how much more you could make if you traded. He looked at my stocks, the stocks that I traded. They moved 1% a day, maybe on average. And then he found the top gainers and top losers. And he said, if you can make that kind of money trading stocks that don't move much, imagine how much more you could make trading the top gainers. So I got into day trading, and within a few months, I lost everything I made and $15,000 more. So that's when I realized that I really didn't know what I was doing. It was just a bullish market. And that was in 2005, 16 years ago. Bullish market. And I just was playing long. I didn't know how to play short anyway. And I got lucky. So I started scouring the internet for trading resources. And I came upon a website called Zacks.com. Everybody knows. It's similar to Finance Yahoo, basically.
How do you spell it? I've not heard of that one.
Zacks.
Okay.
Yeah, Zacks.com. And they were running a trading challenge, and the winner of that challenge got a $100,000 job offer from them. So I participated in the challenge, did poorly, but the top trader in that challenge, he had turned $100,000 into $2 million. Fake money. We're not talking real money. Simulator money. They give you the simulator and you trade the simulator, and after a year the guy with the best record ends up getting the job offer. So unfortunately for him, his dad passed away while he's in the middle of the challenge. So I just sent him a heartfelt message on Zacks. You could communicate with each other on that, and I sent him my condolences. To my amazement, he responded, and we got to correspond a little bit. He told me he had been trading for 15 years, and he learned it all from a small company called Pristine Trading. Mm. So that's when I decided, okay, well, I better check them out. And I ended up, taking their classes, and then later on, I joined their trading room, and I got better and better, and I quit my job. I was a senior auditor at a Big Four accounting firm, KPMG, and I went full time. I got noticed. So one of the guys, he was just a trader, a moderator there, asked me to join him. I had just finished a 6-month remodel project, and I was looking for some kind of change. So I did it, thinking that I would do it for a few months, 6 months, something like this. And I ended up finding out that while trading is something that I really enjoy and I'm good at it, I found out that teaching is my calling, because it's my calling. And so I ended up staying on board. Pristine quickly realized, as the assistant moderator, I was better than the lead mod. And they brought me on board. They made me the lead, and then later on, director of education, and then T3 merged with Pristine, and 6 years later, I'm at T3 still.
Hey, just jumping in here with a message from my sponsor, Sage Strategies. Do you want to trade gold and crypto like the institutions? Well, now you can, and it's free for 14 days with Sage Strategies, fully automated trading strategies. Check out their live track records for 25 unique strategies, plus they'll host everything for you, which is perfect for beginners and advanced traders or investors. Simply sign up for their 14-day free trial at sagestrategies.io and experience it for yourself. Cool. And what do you think was I'm guessing there's a lot of people must, and you would have seen it go through Pristine and not quite make it for whatever reason. What do you think made you different so that you were able to actually break through the barrier and make this thing work?
No special talents, no, you know, you don't have to be really good at math or good at this or that. There are probably two things that separated me from everybody else. One is sheer determination. I mean, I am driven. I may not look like it, but I'm super driven. When I was a kid, I wanted to be a professional athlete. I would work out 8 hours a day, every day, just about. So really just self-driven. So I don't quit until I figure it out, usually. And the other thing is I started young. So I think that's an advantage. It's like learning a language. I learned English as a fourth language, and I can, speak it fluently, even though I learned it as a fourth language. But when you start young, I think you get a better feel for things. It's like, again, just like a language, you lose most of the accent if you start young. So those are the two things, but only those two things.
Oh, cool. All right. So I mean, how do you coach people through that you see in the you were seeing in the forums and that? How did you coach them through trying to overcome the youth side of it? So you can't sort of turn back time, right? Well, you can't turn back time. So how does somebody who's not young how do you get them over that hurdle of, okay, well, you're not young, you've now got to learn this new skill and you've got a whole bunch of other stuff going on in your life. What are your recommendations there?
You try to focus on their strengths. What are they really good at? And then you try to direct them in a way that so that they play to their strengths when it comes to trading. I find that the younger people recognize chart patterns really quickly. Like you show it to them once or twice, next day they're good. But being older, you're wiser. Also, you'll be less likely to blow out your account and go bust and go through the up and down, which can be psychologically damaging for somebody young, or might make him quit completely. So you have to kind of play to your strengths always in trading.
And what about the guys that are less determined? They haven't got as much drive. Maybe they've made a bit of money and they're sort of like just, I don't want to work for anyone. I want to just be able to trade and make some money on, to survive. So their willingness to do it, I suppose their determination is probably a lot lower. How do you deal with those guys, or how do you sort of direct those people?
Two ways. One is, those are not the kind of people that I like to coach, because if you don't have the determination and the drive, this is a tough game. It's not an easy game. If it was easy, everybody would do it, because there's so many advantages to doing it. But the other thing is, then I direct them towards less active trading, more passive trading. This way, okay, you don't want to wake up every day early or whatever. That's fine. Maybe you focus on core trading, long-term trading, not short-term trading. For somebody who's older, doesn't have the drive, the energy. So that's what I do.
And thinking about back to your journey where you were at Pristine and you were sort of going through the educational process and the learning process. I mean, what things can you bring to the table here today to tell the guys, hey, look, here were some things that really helped me out along that journey? Yeah,
I did a 20-minute video on this. Literally, maybe I'll give you the link for it. But the thing about trading is that a lot of people think that they can wing it and make money, and you can get lucky once, twice, 3 times, 4 times, 10 times. You can't get lucky forever. So I don't, just so I'm completely honest with you, I don't recommend trading to family and friends. I don't, because a lot of people think it's an easy way to make a lot of money, and it isn't. It isn't. So I tell people, don't wing it. You either really commit yourself to doing it the right way or not at all. And so that's like the first thing that I try and figure out is, are they really serious about it, or are they in it kind of half-heartedly? And if they're in it half-heartedly, then that's not who I like to work with. So that's the first thing. And then the second thing is, you have to really learn to read price action objectively. A lot of people come to trading because they have money And so, okay, if you have money, by default, you probably were successful in your prior endeavors. And so they come to the market thinking, well, I'm smart. I'm a doctor. I've done really well in my other profession, my other career. So they come to the market thinking that being smart, being really confident, is going to help them. It won't. It'll make them complacent. So you have to be objective. You have to really not make any assumptions about what's going on with this stock or that stock. A lot of people come to me, new traders come and say, oh, I know why this is going up. I know why stock is falling. I'm like, dude, I don't know myself. So, and I've been doing this for half of my life. So you have to learn a methodology that gives you an edge, and you have to remain objective. You can't be making assumptions. You can't be thinking that you're Don Juan, so you're gonna you're gonna really be better than everybody else. Does that make sense? There's a lot of other things. But
Yeah. I mean, it's funny you say that, like, you say you've done it for half your life and you don't know why it's dropping or whatever, or it's pushing up. And other people are going, oh yeah, it's because of this. And it's like, well, hang on, so you're a student, you're a newbie. How do you know? How on earth could you know? And it just goes to show that the whole sort of bias side of it, like people just getting that bias and holding on to it and not being able to release. Right, now we're going to dive into your sort of trading technicals, or not technicals, but more the stats around your trading these days. So, I mean, what does that look like? I mean, how many trades are you taking a week?
I take about 7 trades a day. So I'm an active trader. I do day and swing trades, and I average 7-day trades a day that is. It's actually 6.8, but let's say 7 trades a day. What was the other?
Are they market orders, or are you using limit orders? How do you get in?
Yeah, it depends. If the play for swing trades, every single swing trade that I do, every single one of them is a stop limit, because I put my orders in the system the night before. So I do my scanning, and then the night before I figure out which plays I'm going to do, and I just put my orders in the system the night before. And so every single swing trade is a stop limit order. But for my day trades, sometimes they're limits, sometimes they're market orders if I'm exiting. Mostly limit orders for the entries. I mean almost always limit orders for the entries, and market orders for the exits.
And what about like risk to reward ratio? How does that play out?
Yeah, I look for trades that have at least 2-to-1 reward to risk, at least. And I average 2.5, 2.5, 2.48 to be exact, in terms of my Sharpe ratio, or my reward to risk on every trade. So that's what I look for, at least 2-to-1. If your hit rate is 50%, you're right only half the time, then you only need about 1.0 Sharpe ratio, or 1.0 reward to risk to break even. So 2.0 would be making money hand over fist, basically. Yeah.
And what is your hit ratio? I mean, your win rate?
60%, 58 something. It depends on. I try to do it by strategy. So certain strategies are a little bit higher than other strategies, but on average about 60%.
And how do you find the stocks that you're going to trade? Do you have a set number of stocks, or are you scanning a whole bunch?
No, I mean so for day trading, I do my scanning in the pre-market. I look for gaps, for gapping stocks, because gaps create momentum after the open, and I can read the gap. I can tell what's happening to the traders that are in the stock, if they're trapped, what's happening to them. So I can predict, for the most part, how they're going to react after the open, whether they're going to cover or go long or sell their position after the open. And so that gives me an advantage. And plus, gapping stocks move a lot after the open. So that's what I focus on for day trading. For swing trading, I do my scanning on TC2000. So I do it once a week on the weekend. And then I generate a list about, let's say, 200 to 300 symbols that I really like. I scan the entire stock market, U.S. stock market, any stock that does over 500,000 shares in volume, that makes it to my list, basically. And then that's about 2,000 charts. And I narrow it down to about 200 to 300 of things that are interesting. And that's the list that I scan on a daily basis after the close. to find plays from for swing trading. So, day trading pre-market and then swing trading post-market.
And how long does it take you to scan 200 to 300 stocks?
Oh, I mean, no more than 10 minutes, basically. I'm just going one by one. They're in a watch list. It doesn't take more than 10 minutes.
Yeah, and you're just looking for the gap, and if you see it, you know it, and there's no hesitation.
I'm looking for a certain pattern, right?
Right, yeah,
Maybe
yeah,
I'll show you what I'm looking for later on.
Okay, cool. And have you ever considered trading anything else, like any other instruments? And if so, how did that go?
Yeah, I did trade options for about a month, and I traded options because I was learning a new strategy on how to trade earnings. Basically, I figured out a way to get into the stock, to figure out whether it's going to gap up or down on earnings, and get in before the company even reports. So I wanted to limit my risk, and I traded earnings using options. And I think I had $20,000 in the account. Within 1 month, I made $5,000, which was pretty good, I thought. And then the next month, I lost the $5,000. So that was my entire experience with options. Made 5,000, lost 5,000, and then I quit. I just do stocks, basically.
Yeah.
And cryptocurrency I do also.
Oh, okay, cool. I mean, what sort of crypto trading do you do? Sorry, and just to give a quick summary of that.
Oh, yeah. I do the same kind of patterns, but not gaps, obviously, because it's a 24-hour market, so it doesn't gap. But I do. That's what I have over there. That's cryptocurrency. So I focus on Ether, Bitcoin, Litecoin, the major coins. But sometimes, I scan the list, the cryptocurrencies that are available through Kraken, the exchange that I use, or Coinbase. That's Coinbase over there. And next to it is Kraken. And then sometimes I end up trading altcoins. But most of the time I focus on Ether, Bitcoin, Litecoin,
cool.
The major coins.
And have you got a sort of view on Bitcoin at the moment in terms of where you think it might go? It's sort of hovering in that range of 35K. It's the date is the 7th of the 8th of July or 7th for you.
Look, I think Bitcoin, if it breaks last week's low, I don't know exactly what it is. I think it's about 32,700. I think it's lower. If it breaks 32,700, I think it's lower. But I'm telling you from now, if Bitcoin goes higher, it's not going to be Bitcoin that will rally really hard. I'm almost sure of it. It's going to be Ether or Ether Classic, the ETC coin. So that's what I like long term. If Bitcoin were to, if we're at a bottom, and it's hard to tell. If Bitcoin goes up from here, I like Ether a lot more, showing a lot of relative strength.
Yeah, interesting. Okay, so what does your typical trading day look like then?
So I work about 12 hours a day, every day almost. So I'm on the West Coast, so I start my day at 5 a.m., which is 8 a.m. East Coast time. And then so I scan for the pre-market. Then I'm on the microphone, just like now, between 9 a.m. to about 11 o'clock or so. So for a couple of hours. Then I take a break. I have an assistant that comes on for a little while. Then lunch break. Then I come back on. And then I finish the day obviously at 4 o'clock. And then I do my scanning for the swing trades. So the scanning, and then I have a newsletter that I publish, so I update that the night before, and then I put my orders in the system. So that takes a while. So I pretty much start at 8 and I finish around 8. So about 12 hours every day.
Oh, it's busy. And just out of interest, do you trade the cryptos over the weekend?
I do, but this is the one thing I don't like about cryptocurrency is that it's a 24-hour market. It doesn't sleep. And so nor do I when it's really moving and I have a large position. So that's what I don't like about it. That's why I never even tried Forex, because I didn't want to be tied to a market that trades 24 hours a day.
Okay. Now, if you're a retail trader working a day job, what steps would you say, hey, look, go through and go do these things to start growing an account?
Well, like I said earlier, you kind of, if you're really serious about it and you're thinking about doing this day in and day out, you're not just, if you just want to gamble once or twice, don't learn anything. Just bet however much you want to bet, try it once, twice, that's it. But if you're thinking about doing this on a consistent basis, then you obviously need to learn an objective way to analyze charts and then take advantage of repeating patterns. So learn a methodology that resonates with you, that makes sense to you, that you agree with, that you really love, that you enjoy. Because a lot of people, there's a million ways to skin a cat. But a lot of people, so there isn't the right way or the wrong way. There's the way that works for you. I love the story of Jack Schwager, who wrote the Market Wizards book series. Jack Schwager, I don't know if you know his story or not, he was a struggling trader. He never got his account to above $100,000. He could never get it to above 100, even though he had lot of resources, had staff at some point. So he set out to interview the world's best traders, thinking that they all traded alike. They must trade the same strategies. And he found out, after interviewing the world's best traders, he found out that not two traded alike. They all traded differently. A lot of them traded different instruments, different times of the day, different time frames, but they all traded in a way that suits their own natural personality. And so he said, if you take nothing out of this book, and it's a 400-page book or something like that, and get this, then it was well worth your time. You have to trade in a way that suits your own natural personality. You can't be, for example, if you're not, by nature, you're just not patient. You get stuck in a traffic jam and you start pounding the wheel or whatever. Then obviously you can't be taking trades or learning a methodology that requires a lot of patience. And so you have to kind of trade in a way that suits you. And the best way to find out is by experimenting with small money in the beginning. Very, very small, like risking $5 per trade, something that will not hurt you. So that's what I recommend. Learning a way that is objective as much as possible, and that has an edge, and that really makes sense to you, that you really understand and agree with.
Awesome. Yeah, cool. And just diving into the more technical side of things, what I was thinking about a stock chart, what 3 things would you say, hey, go away and study these to get somebody just started on like being able to read a stock chart a lot better than they currently do?
Yeah. I think, so one thing that really helped me in the beginning was, I don't know how I thought of it, but I just wanted to find out how trends started. Like what got the stock, I looked at certain stocks, Apple, RIM at the time, Research in Motion, which is now BlackBerry. And they looked like a rocket ship. And I went back and I said, what got this started? Like, what was the pattern that really ignited this move? So one of the very first things that I recommend to somebody who's new is go back and look at the charts that you think made a huge move, and just go back to the beginning and see how it started. What got it ignited, so to speak? Okay? So find out what ends old trends and what begins new trends. That's one thing. Another thing would be, when it comes to charts, find the repeating patterns. Now, charts, what are they? They're representation of what people, it's a plotting of what people do. And individual psychology is hard to predict, but group psychology is easy to predict. And so charts basically tell us what people are doing. So, and human psychology doesn't change. So patterns repeat. They just repeat. They may look a little different. They may form on different time frames. So find those out. Find out what the repeating patterns that happen all the time. Then you can take advantage of them. If you find out what they are, how they set up, to execute those trades, then you can take advantage. But so those are a couple of things that I would recommend somebody who's just starting out.
Cool. I like that. Now, thinking about a trader's mindset, I mean, do you have any special techniques you can share with us?
Special techniques, lots. But okay, there's a couple of things like really simple without going over the charts that I can just tell you right now. First, when the most important things that new traders almost know nothing about is share sizing. It's not a sexy topic, so people don't really talk about it. But I learned this from Van Tharp, who wrote a couple of books, but the most famous book I would say was Trade Your Way to Financial Freedom. Really boring book, but that's what I learned, is about how to share size correctly. A lot of people basically buy, 500 shares of whatever stock they want to trade, 500 shares of Bank of America, 500 shares of Apple, 500 shares of Tesla, not knowing that when they're doing this, they might be risking a lot of money when they're buying 500 shares of let's say Apple versus 500 shares of Sirius Satellite, which is a $5 stock or something like this. So you have to share size correctly. And in order to share size correctly, you have to know two things. One is how much you want to risk per trade. What's your R unit, your risk unit? For example, I like to risk $500 per trade on every trade, a day trade, 1,000 or 2,000 depending on the setup for my swing trades. So how do you share? How many shares do you buy if you're only wanting to risk $100? So there's a formula for it, and it's share size equals risk amount. So figure out what you want to risk: $100, $50, $200, divided by the entry price minus the stop price. So again, it's the risk amount divided by the difference between the entry and the stop price. Now that gives you the share size. Now, instead of having to take out a calculator and calculate it every time, no, you just kind of create a little table like this. I don't know if you can see it, but whatever. It's a little table that tells, and I tape it to my monitor, that tells me how many shares to buy based on the size of the stop. Meaning if I were to buy a stock at $10 and my stop is at $9, then that's a $1 stop. So 500 divided by 1, that's 500 shares. And so it's a table that I look at and I eyeball it, to see how many shares to buy. So that's a quick and easy way to fix one of the most important things, which is risk control and share sizing correctly. And again, it's not a sexy topic, so a lot of new traders just completely ignore it. Another thing is management. When do you get out of a trade? How do you know when to get out of a trade? Most people, I would say, new traders, they're completely focused on getting into the trade. They want to get in at the bottom. And it makes sense because getting in at the bottom makes you feel good about yourself, makes you feel like you're smarter than everybody else. So it makes sense. They're focused on the entries. But what really puts money in your account is the correct exit. This is why most professional traders read Market Wizards. Don't believe me. Most professional traders, their batting average, their hit rate is no higher than 60%, no higher than 50% a lot of times. And yet they make a lot of money because when they're right, they make a lot more than when they're wrong. So learn how to manage. One of the easiest way to manage is to go bar by bar. So that means, you get into the trade. So what I do is I get into the trade. It goes 2 bars in my favor. Then I start raising my stop, trailing it, raising my stop to under the last bar's low. And I almost guarantee you, if you do that, you'll make more money than the way you're currently, than most people manage, because they don't know how to manage. They're just exiting randomly. So just go bar by bar in the beginning until you learn about pivots, moving averages, and how to really raise your stop slowly. But that's another, kind of a quick and easy way, a tip to share with your viewers.
And do you find that sometimes you end up like getting less than 1R because of that?
Oh, yeah.
Yeah?
For sure.
But is it the case that in the long run, you're still actually making money because you're getting out of the trade that probably wasn't going to work out in the first place?
Exactly. In fact, a quick and easy way to eliminate the losers is always place your stop. As soon as you get in it, place the stop under the entry bar's low. Because if the entry bar gets negated, guess what? It's probably no good. So that's a quick and easy way to eliminate a lot of the losers, a lot of the bad trades, basically.
It's interesting because that was something I struggled with for years in the early days, was like, but surely you've got to wait for the don't you have to? It was like a rule that somebody had set in my mind, or I'd set in my own mind. You had to get at least double your risk before you exit a trade.
Right.
Otherwise, you're not trading properly. So yeah, it's interesting you say that. I'm quite happy to hear that, funnily enough.
Yeah, absolutely. You can't be attached to the result, that this trade have to make me this amount of money. You can't. You cannot be married to stocks.
Cool. Now, before we get into the quickfire round, if there was one thing you recommend a retail trader spend the next month mastering, what would it be?
I think for somebody who's new, one of the key things, so we talked about a couple of things, but one of the key things is to not trade aimlessly. Like every day you're just trading, and then and then at the end of the day you shut down and you go about your evening, and then you come back so trade in batches. Trade in a sample of 10, 20, 30 trades, and then review the result. Make some adjustments, and then put on another set of 10, 20 trades, make some adjustments. So it's so much better if you trade. I wish I knew about this, which is trading in batches, so that you're reviewing a sample of trades and you're making adjustments, and then you put on another sample. So that's something that I wish I knew when I first started out.
Okay, and just to clarify that, so that's not like, so that batch could be over the course of, say, a week, for example, and
Exactly.
then, or maybe even a week and a half, and you've done your 30, and then you go and review that. Okay, right, that's interesting. I've not heard that yet.
The more active you are, the larger the sample size has to be.
Yeah.
The more, the more passive you are, the smaller the sample size, basically.
Awesome. Great little tip there, guys. Right, quick fire round. How long did it take you to go from newbie to consistently profitable?
So about 2 years, until I live in the Bay Area. It's one of the most expensive places in the country. Until I didn't really need to make any additional money from any other source. 2 years, I would say, about 2 years.
What's your favorite entry setup?
I would say the 1, 2, 3 setup, igniting bar, narrow range, resting bar, and then a continuation bar. So it's called the 1, 2, 3 setup. 1, 2, 3 play.
What about strategies to exit or manage trades?
Favorite is the simplest, bar by bar.
Do you have a recommended trading book or resource?
Yeah, lots of them, but a lot of books will teach you, you'll give you some kind of insight, but they won't really teach you the practical stuff. So just keep that in mind, that you're not going to learn how to trade from a book. But my favorite book on trading, there's 2 of them. One is Reminiscences of a Stock Operator, because there's a lot of insight. And then the other one is Trading in the Zone by Mark Douglas. Those are the 2.
Do you have a quote from that Reminiscences of a Stock Operator you could reel off?
Yeah, I learned something really important from that book. And now I use it in my trading, in my everyday trading, which is, he talks about hope and fear, pages 114 through 115. And he says that when the market goes your way, you become fearful. Then the next day will take away your profit and you get out too soon. Fear keeps you from making as much money as you ought to. The successful trader has to reverse what you might call his natural impulses. Instead of hoping, he must fear. Instead of fearing, he must hope. And he must fear that his loss may develop into a much bigger loss, and hope that his profit may become a big profit. Notice I'm not reading this. I know it by heart almost. Basically, what he's saying is, when the trade starts to go in our way, our fear kicks in, fear of giving back the profit. And so what do we end up doing? We end up getting out. We end up paying an inordinate amount of attention to the red bars, which triggers our fears and gets us out of the trade. And when the trade goes against us, we end up hoping. We start hoping that, please let's hope it goes back up. And we stay longer than we should had we not listened to hope. So he's saying we should reverse those 2 natural impulses. Instead of fearing, we must hope. Instead of hoping, we must fear. So to summarize, the thing to do is when the stock is going in your favor, make sure you don't let fear of giving back profit get you out of the trade too soon. When the stock goes against you, you get in, and it goes against you. A lot of people, hope kicks in, hopium. not good. So make sure you don't have any hope. Just get out of it. Be very, like stone cold with it. So that's kind of, and that's why they say that traders eat like birds. When they make money, they make small money because fear gets them out of the trade. And then when they lose big money. Traders eat like birds and crap like elephants.
Right. I'm so glad I asked that question, because that is gold, absolute gold, and it saved everyone who hasn't read that book a whole lot of time, because they've got probably one of the best nuggets I've heard in ages. I'm going to, in fact, write that down and put it somewhere on my screen somewhere. Now, what about what about your preferred broker and trading platform?
I've tried a whole bunch. So I like E-Trade a lot because they don't hang your order. Like a lot of other brokers, when I try to exit, I get the execution, as opposed to other brokers where my order just sits there for a few seconds and then they release it. So my main broker is E-Trade, but I also use TradeStation for a lot of my swing trades. So E-Trade and TradeStation.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Cool. And do you want to walk us through your worst ever trade?
Yeah, I can. Maybe are we gonna? If I share the screen, I can show you actually.
Oh, okay. Yeah, I mean, if you want to, share the screen now if you can and show us.
Okay. Yeah. All right. Real quick, okay? I know we gotta.
So for the guys listening on the podcast, you're probably gonna have to jump onto the YouTube channel to watch this.
Oh, okay. Well,
that's all right.
And I'll talk through it. There were 4 of them basically. Let's see. Hold on. So here's my worst 2 trades. I have 4 really bad trades, $20,000 losses, each of them. And 2 of them happened this year, of course. Embarrassing, but I'm a real trader. It is what it is. TIRX and FINV. Notice they're 18,000 and 19,000. So those 2. And then I have a couple more really bad trades from in the past. So these 2, I'll show you the chart for those. Basically, the TIRX collapsed. So this is no, I can't show you the chart here. Let me just see real quick.
And for the guys listening, so you can actually see these amounts on the screen here. And you've obviously sorted it by your best to worst trades, I'm guessing.
Right. And best trades I got much better, obviously. I got 100K almost out of ZOM, Sandal 91. This is for the year to date.
Yeah.
So I have a lot of good trades, but so the worst 4 trades are TIRX, which got halted. I had 1,500 shares in it, and this day I know it does. This is the daily chart. It dropped from like $100, $97, $12. And got halted, and I was actually up $9,000 on it. Got halted. I had 1,500 shares, not a lot, but it collapsed on me. And then the other bad trade that I showed you was the FINV, which was on this day. I tried to short it, and the stock was on an uptick, meaning, was it on an uptick? I'm not really sure. But basically, I tried to short it, and it kept going up. But the reason why I usually just get out, I try to short a stock, it doesn't work. Okay, get out. That's what I do. But in this case, I was afraid to miss the top. So I shorted it. And then when it went against me, I didn't exit. What I did was I just went long. So a lot of brokers don't allow you to have a box position like this. E-Trade does. So I went short and long the same stock. And every time I thought it topped out, I would exit my long position and keep the short on. And it kept going up. And so I would put on a new long position. And every time I thought it topped out, I'd exit the long and then keep the short position on. And the loss kept getting bigger and bigger. And I ended up losing $1,000 on this one. So 18 on this, TIRX, I think 19 and some change. And then a couple of other stocks that I lost about $20,000 on one was hot. HOT, which got acquired by Marriott. I was in it swing short 1,700 shares, about $80,000 in it short. Not because I wanted to. It was in my day trading account, but because the platform crashed, and I was complaining to the broker the days before that right before the close, the platform just would go down. The route. So I was with Legend Securities at the time, in the name of the broker. And of course, I was in hot short. The platform, I couldn't exit. And then the next day, it got bought by Marriott. So I lost $20,000 on it. And then another stock that I lost $20,000 on was, I don't remember the exact position, but it was Triquint, TQNT, but it also got bought. So it's no longer a stock. I was in it. I didn't lose 20. I think I lost 15 total on that. And I was in the stock short 10,000 shares. And when I covered it, I bought 100,000. And in your platform, you can set up a setting where like a soft setting for maximum shares allowed. And I didn't have that set up. So it actually executed the 100,000 shares. And so now I'm long 90,000, and then the stock started to drop. So I kept, exiting every penny I exited, every penny it dropped, I exited 10,000 shares. When all said and done, I ended up losing $15,000 on it. So those were the worst 4 trades I've ever had.
Sorry to take you there and then relive them.
No problem. No problem.
Now, do you want to leave our listeners with one piece of advice?
If I were to leave you with one piece of advice, it would be some of the things that we talked about, like, don't wing it, do it. You either do it seriously or not at all. Study your own psychology, understand hope and fear. We talked about hope and fear. Just know that your attachment to a certain result, attachment to money usually, and to being right and winning, that's your number one cause of failure, is being attached to a certain result. Being concerned about, not being concerned, but being concerned about being wrong. And so you don't want to be you don't want to be protecting your ego as a trader. You want to be really vulnerable and just act as though you're an employee acting on behalf of somebody else. It's not even your own account. Let's see. There's a lot of different things. I talked about trading in batches. I think it's really important to trade in a group setting, not by yourself, because group setting, there's a lot of eyes looking for the same thing. By yourself, you can go crazy. You can start imagining things. And then, as I said, trade in line with your own natural personality, and don't paper trade. If you're going to paper trade at all, don't paper trade for too long, because then you don't engage your emotions, basically, if you paper trade for too long. So those are some of the things that I recommend.
Cool.
And I have a whole video on, literally a 20-minute video on just those things, the top things that I wish somebody would have taught me when I was starting out, is the title of the video, something like that.
Cool. Awesome. Well, look, before we wrap up, what's the best way for the traders to get hold of you?
I think the best way is to go to t3live.com, or that's our website, or send an email, info@t3live.com, and then they can forward it to me. But that's either t3live.com or info@t3live.com.
Awesome. Well, look, a big thank you for Sammy for sharing with us today. Everything we've discussed here, along with all the links, are in the show notes. To find them, simply search for Sammy, Sami, in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success. All right, folks, so there we go. Interview done and dusted with Sammy. Now, do remember, go and check out that video where Sammy walks you through a simple trading strategy. And I've got to say, this is one of probably the most simple strategies I've heard of ever. And he does very well with it as well. So, guys, go and check that out, because he gives examples on charts and all sorts of things. So it's really, really good. Check that out on the YouTube channel. Also, remember, payment plan is a new way to come on board if you want to segment your payments up for the Robot Builders Club. I'm going to end the Robot Builder Club new memberships soon. So if you do want to come on board, now is the chance to do that. Don't hold off. Don't hesitate. This is the chance. The club will be carrying on, but just new members, the doors will be closing soon. All right, folks. Thanks for watching, and we'll see you in the next video.